Hello, very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be Tuesday, the 8th of July, 2025. So, as usual, before we jump straight into today's very interesting Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, before we jump straight into the gist of today's Daily Dose of Market Insights, which is the intraday technical outlook on the various respective broad-based cross-asset classes ranging from the 4 US dollar major pair, the major stock indices, and as well as the two key commodities market, i.e. Gold XAU/USD and West Texas crude oil. Let's have a quick recap what has taken shape yesterday, early today morning as well, in terms of relevant economic news flow, data releases, if any, and as well as its impact on the various intraday movement on the broad-based cross-asset classes. So yesterday's news is more pertaining to this US trade tariffs. So we know that the trade tariffs, the higher reciprocal trade tariffs, the expiration date of that 90 days pause after the announcement of the 2nd of April, Liberation Day from US White House is coming close to a due date or expiration date on 9th of July. And yesterday, Trump, he announced that a couple of very complicating sets of tariffs. So what do I mean by this? So let me share with you what has taken shape yesterday. All right. So what we could see over here in my screen, let me expand my screen. Okay, so hopefully it's big enough. Right, so he actually set a higher rates, or I would say not higher rates, put it away that he actually sent out letters, all right, sent out letters to 14 trading partners, all right, highlighting these 14 trading partners. Very likely that these trading partners are actually facing a bit of uneasy negotiation process between US and these respective trading partners. And two of them are very close to Asia, which is Japan and South Korea. So yesterday he sent out letters to these his totals 14 of them. Later I'll show the whole list. So Japan and South Korea is the most important. Why? Because their financial markets are the most liquid and interconnected with the global markets. So 25% tariffs on Japan and South Korea. So South Korea, this tariff rate actually is not an incremental, I'll put it with that, it's not so much of a difference from the reciprocal tariff rates that is being announced on the 2nd of April. So 2nd of April, we have the 10% base rate and followed by the higher reciprocal rate. So this 25% tariffs on Japan and South Korea is the combination of two, the base and the reciprocal. So after taking into account combination of two, Japan is hit by 25%, Korea is also hit by 25%. All right, so Korea is the same at 25% previously on 2nd of April. For Japan, only 1% increase. So Japan rates was actually 24%, then 10% base, 14% the additional reciprocal tariff. So adjusted everything together, 25%. So what's interesting over here is that Trump gave a bit of breathing room, saying that right now, the 9th of July deadline or the expiration date of this reciprocal tariffs to kick in is been extended 3 more weeks to August the 1st, and it's not 100% firm. That means, i.e., there could be more room for extension beyond 1st of August, as he actually mentioned that he allows time for more talks over here. So basically, what we are seeing right now is a kind of situation where market participants has a very short-term memory, say that Trump will always chicken out. It means we talk about TACO, taco trade. That means Trump initially he give a very strong and tough man rhetoric talk, but however towards the end he will actually try to actually tone down his rhetoric. So if we were to look at the current situation right now in Asia, especially countries that were being hit by the tariff, the two of them, Japan and South Korea, that means not say hit, received the letters announcing kind of a warning letter stating that Trump will hit them with higher tariff if the 1st of August nothing is being by 1st of August nothing headway is being done between the negotiation process. But market is right now reacting very positively to this news flow. So Nikkei 225 is actually up by 0.31% as we are speaking right now. The Hang Seng is up by almost 1%, 0.85%. The Hang Seng Tech is up by 1.37%, and even South Korea is actually up by 1.37% as indicated by the Kospi. So Kospi 200, pardon me. So what we could see over here is that there is actually not much of a significant risk off movement that is being seen on the broad-based cross asset classes right now. It's more actually risk on instead in those we call it countries that has received these letters, this what I call tariffs. This put it away that threat from Trump stating that to speed up their negotiation process. So market always tends to fall back that Trump will tends to tone down and perhaps potentially trying to extend the deadline much further. So the reason why Trump is doing this for the extension of the deadline, so let me share with you guys over here, is more pertaining to China. All right, let me share with you what is this called, China. All right, so the reason why Trump tends to actually focus on giving this extension is to close up any loophole, focusing on these transshipments from China, because we know that China is a big trading partner of in the Asia region. So to actually circumvent some of the tariffs that US hit on China, China will tend to ship their products to other ASEAN countries, and from there when they ship out to US, they may not face that direct tariff. So one of the reasons why Trump wanted to actually extend this 9th of July deadline is to actually close up this loophole that other US trading partners have that could potentially do that transshipment from China. So that's the reason why I believe that that's the reason why he extend this deadline to close this loophole instead. And one of the more promising one will be in this so-called Europe over here. So if you look at Europe, there's some form of so-called news. Okay, 1 second. Let me open up the Europe one. Yeah, so this is what I'm talking about. So this is the one of the reason why Trump wants to extend the 9th of July deadline to 1st of August, right, is to aim to shut down trade loopholes China used to evade tariffs. And one thing coming up from positive is EU. Europe is not being so-called sent out that so-called tariffs threat letter by Trump yesterday, by US White House yesterday, because saying that there could be a chance of a framework that could be announced between EU and US this week. All right, so the European Union is seeking to conclude a preliminary trade deal with US this week, means by the end of this week, that will allow to lock in a 10% rate beyond the 1st of August deadline as they negotiated a permanent agreement. So they are also having this 10% base rate, but however, within this 10% base rate, EU is seeking an exemption from certain key products that include aircraft parts, and as well as wine and spirits. So those are key European exports to US. So that also actually explain why yesterday during the start of the US session, where the US stock market tumbled, but European stock market continues to hold very firmly as the US session kickstart in the middle part of the cash market in EU closes at the cash market of European benchmark stock indices closed at around 12 a.m. Singapore time. So by 12 a.m. Singapore time, the US stock market actually tumbled. This is the S&P over here. It tumbled and only recovered at the later part of the session at 2:30 a.m. So despite the sell-off in the US market at the start of the yesterday's US session from Singapore time, 9:30 p.m. all the way up to 12 a.m. during this period, the European market are very, very firm. So the German DAX is actually up by 1.2%. So for those who follow my daily dose of market insight, I do stress that if very short-term intraday movement, technicals and positioning plays more a significant role compared to fundamentals and news flow. Yeah, news flow may create a shock, but if those levels are not being taken out, we got to respect the trend on a very intraday short-term basis. So yesterday we do highlight that, or even on Friday we do highlight, or not even Friday, late last week we do highlight that the German 30, which is the instrument, the CFD index in our platform that's representing the German DAX, has hit the key support level and holding firmly above the 50-day moving average. So that actually explained to us why there is a bullish sentiment that is actually supporting the Germany 40 index yesterday, or the German DAX yesterday, and that positive news flow from this, even way ahead of this bounce, that positive news flow, which is this one over here, this framework that was announced, okay, this EU preliminary framework that's being announced, all right, and it's only being announced at 3:42 a.m. Singapore time, before the bounce took shape. All right, so it actually reinforced the bullish sentiment. So that's how very interesting how technicals work. It tends to have a bit of heads up in terms ahead of certain news flow release. So news flow release just enhance the ongoing bullish sentiment that we see in the Germany DAX index, which we highlighted yesterday. So later I'll touch on again what are the key levels to watch in today's intraday technical view for the German DAX. And this is the entire fact sheet over here. So this is the official list, 14 of them that receive letters from the president. So the bracket is the total adjusted reciprocal tariff rates that include the base of 10% as well. So Japan is 25%. So we have our in Asia, Thailand 36, Malaysia 25. So Indonesia 32%. So if you look at the stock market performance of Malaysia, Indonesia, Thailand, and Indonesia, we know that Japan and Korea perform very strongly today, given that market is having this anticipation that towards the end, Trump will actually back down on negotiation to reduce this tariff rate of 25%. All right, so let's look at the other Asia countries' performance after receiving that love letter, all right, from US President Trump. So let's take a quick look. Okay, so it should be over here above it. Yeah. All right. So if you look at where is it? Yeah, Thailand. Okay, so Thailand is indeed very badly down negative 1%. Indonesia down negative 0.4%, and Malaysia down negative 0.6%. But however, it's only localized according to these three countries. But however, the major benchmark stock in the Asia Pacific benchmark indices, it's all positive. Nikkei 225 up by 0.3%, Hang Seng up by 0.84%, the Hang Seng Tech, which comprises of the China big tech stock, up by 1.4%, and the HSCEI, which comprises of the key China H shares listed in the Hong Kong Stock Exchange, is up by 0.9%, and even the mainland A shares market, which is defined by the benchmark CSI 300, is up by 0.6%. And what we could see over here is that our STI continues to scale fresh all-time high. So it's more like a safe haven market right now, up by 0.4% to 4,048. Australia is up by 0.06% as we await for RBA monetary policy decision that is due later. So later I'll share more about that. Right. So what we could see over here is that even the Nasdaq E-mini futures, then very quickly, the E-mini is actually unchanged, 0.02%. The Nasdaq E-mini futures, the S&P E-mini futures unchanged. The higher beta Nasdaq 100 E-mini futures is up by 0.17%. So not a totally risk-off environment as seen by this global benchmark stock indices, and as well as the S&P and the E-mini futures that's trading right now. So there is still some form of bullish sentiment that is still seeping through the global stock market, with the exception of Thailand, Malaysia, and Indonesia stock market. Okay, so more risk on than risk off. And to the FX market right now, so let's take a look at the FX market over here. So I could see the FX market at this point in time is more like sideways. So what you could see was initially the dollar rallied, okay, until 2:30 a.m. Singapore time this morning. Then thereafter, the dollar strength tried to dissipate, except for the dollar yen. So if you look at this, the 5-day rolling performance. So if we go down to the 1-day rolling performance, so 1-day rolling performance will take into account of the start of today's Asia session. All right, so if you look at that of the today's Asia session, the dollar is actually pretty much sideways over here. All right, so the dollar strength dwindled down. So even there's this spike up in the dollar yen at from the start of the US session. All right, and right now as we are speaking at 9 from the US session all the way up to 9:16 Singapore time AM. So the dollar yen means the dollar's strength in the yen starts to go side donald off instead. So later I'll touch on the dollar yen technical outlook. So it's more in a complex sideways range since April. All right, so later I'll touch more about that. So even what I say that the FX market right now, no clear dollar strength, is rather mixed right now. All right, and for the gold, so what's interesting that gold yesterday we flipped to a neutrality stance because of this very mixed technical element. And what's interesting in gold, so this is gold, the daily chart of gold. So I could see that the daily chart of gold continues to be sandwiched between the 20-day and the 50-day moving average. So this is something like a Bollinger Band squeeze over here. All right, very clearly. So since 1st of July, that means the start of this month, it's been sandwiched between the 20 and the 50-day moving average. And what's interesting is that yesterday's price action, yes, there was an intraday breach on the 50-day moving average. So that's why we flipped to a neutrality stand yesterday as we conduct our daily dose at 11 a.m. Singapore time every day. So there was a breach that we turned neutral. So by the end of the US session yesterday, the breach managed to actually recover and form a bullish hammer candlestick right exactly at the retest and the challenge of the 50-day moving average. So it seems to us that it continues to be congested again within this 20-day and the 50-day moving average. So we know that at the bottom side near the 50-day moving average, there's also bullish momentum or bullish sentiment coming to support gold price. So we cannot say that it's still an outright bearish situation for gold right now, more like a sideways position. And for the bulls, every time it hit near the 20-day moving average, there's some selling pressure coming in, which is at graphically is at the 3,360 level, which is very clearly the upper body of these two bearish candlestick that is being formed on the 24th of June and as well as 3rd of July. So later I'll touch more on that when I cover the short-term intraday technical outlook for gold XAU/USD. So as for the West Texas crude oil over here, so West Texas crude oil, what I could see on the daily chart, it continues to bounce yesterday, but can't break above the 200-day moving average. All right, over here. All right, so yesterday there was a rebound of positive 2%, but still can't break above the 200-day moving average, where previously there was a huge sell off bearish candlestick on the 23rd of June, where we start to see the tone down of the Israel-Iran conflict that previously saw that a tremendous rally. Then after this rally, got this inverted V-shaped bearish reversal. All right, so no clear signs that we are in the start of a major bottoming formation for West Texas oil, given the fact that OPEC Plus is still in favor of increasing supply to the oil market in the Middle East, with that we call it August supply hike that came in more than expected, announced over the weekend, over at Saturday. All right, so that sum up the first segment of today's daily dose. So now let me touch on the second segment of today's daily dose, which is the intraday technical outlook. All right. So let me starting the FX market. So with that, let me expand my screen. Right. So I hope that you guys could see the screen. Okay, should be all good. Yeah. So let's start with the euro dollar. Okay, so for euro dollar, yesterday we flipped to a intraday bearish bias for a potential setback. So the support level has been met after the break of that 117.40, hit our support exactly at 116.85. And what's interesting right now, there is short-term bullish element coming back to the euro dollar after yesterday's intraday sell-off upon hitting that support level at 116.85. So firstly, it managed, the sell-off managed to pause at the median line, which is this dotted light green line over here of this medium term ascending channel that I drew from the low of 13th of May 2025. All right. And during the last pair of lower low or lower low, this low is lower than this lower low, the hourly RSI hit the oversold region, but instead of forming similar lower low, it formed a higher low instead. So this higher low is a bullish divergence that indicate that yesterday's bearish momentum has started to ease off. And as we are speaking, the market bounces right now, right from the support. Then after this bounce from the support, it also broke out from this former parallel key descending trendline resistance and shape a momentum bullish breakout right above the 50 level and even hasn't hit the overbought level yet. So indicating the start of a bullish momentum condition that has starts to take hold on the euro dollar as we are speaking right now. So with this bullish momentum that is just resurfacing in the euro dollar on a very short term basis, so it does not justify for us to continue to maintain our bearish bias, pardon me, that we have yesterday, given that this low at 116.85 may really complete this corrective setback that has taken shape since the high of 1st of July to yesterday's 7th of July US session low. That means this will be the completion of this minor corrective decline, and right now we are likely in the midst of a potential bullish impulsive up move sequence, given the fact that price action managed to bounce off from the median line of this medium term ascending channel. And in terms of the Fibo retracement taken from the low of 23rd of June all the way up to the high of 1st of July, that also coincide with the 38.2% Fibo retracement in yesterday's minor low. All right, and also being supported by the positive observation that I highlighted earlier on the hourly RSI momentum indicator. So with that, we'll be flipping to a intraday bullish bias again, looking out for the sign or a potential impulsive up move sequence that may resume using 116.85 as my short-term pivotal support for today. First resistance level, it got to surpass for today to increase the odds of this start of a potential bullish impulsive up move will be this intermediate resistance at 117.70 over here. Let me put it in writing. Okay, so basically this is the previous minor congestion. After this congestion breakdown, you start to see the last leg of this minor corrective decline to hit the 116.85 over here. Right, so this is the intermediate resistance level to watch, or a upside trigger level, I would say 1.1770. Okay, above 1.1770, revisit 11810, 11825, and above it sees the next intermediate resistance to come in at 11870, which is a Fibo extension clustering level and also close to the upper limit of this medium term ascending channel from 13th of May 2025 low. However, price action did a bearish U-turn with an hourly close and a breakdown below 116.85 short-term pivotal support that would invalidate today's bullish bias scenario to see the extension of this minor corrective decline, extending its weakness to retest the 20-day moving average. There's also confluence with the next intermediate support at 116.30. So upon hitting 116.30, which is right exactly at the 20-day moving average, I'll be looking out for bullish element again to flip back to a bullish bias, given that the medium-term uptrend is still intact for the euro dollar. All right, so That's for the euro dollar. Next up will be the sterling dollar. So the sterling dollar yesterday managed to hit our first support level at 135.70, which is sold at the 20-day moving average before bouncing up. But this bounce over here, there's no bullish divergence because the way it bounced, right? Notice that this is a lower low, and there's also a lower low over here. That's it. So this is a higher low, it bounced, there's also a higher low. All right, so there's no bullish divergence. So with that, there could be still some form of weakness to revisit the 135.70 again, and as it continues to face potential congestion or resistance at the short-term pivotal support that we highlighted last week as well. So no change, still using that 136.70 / 136.90 short-term pivotal resistance level for the sterling dollar. Still maintain our bearish bias. So in first step, watching out for the 135.70. Only a breakdown below 135.70 may see the extension of this minor corrective decline sequence to expose the next near-term support level at 134.70, which coincide with the rising 50-day moving average. Only a bullish breakout and an hourly close above 136.90 that would invalidate today's intraday bearish bias on the sterling dollar to kickstart another fresh impulsive up move sequence, potentially revisiting 138 figure 138.30 next in the first step. So that's for the sterling dollar. Next up will be the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar, yesterday we do have a bullish bias upon, as price action is coming very close to the 50-day moving average, where we put it at 64.80 as our short-term pivotal support level. Indeed, it came down and did a pause over here and did a U-turn, and now attempting to break back up the 20-day moving average, which is at 0.6520. And what's interesting that yesterday's price action almost hitting our pivotal support level at 64.80. Yesterday's intraday low was 64.86, give or take. We start to see positive observation in the hourly RSI. So what do I mean by this? Price action shape a lower low. Corresponding period, the RSI shaped a higher low upon hitting a extreme oversold level. And as you are speaking right now, the RSI also did a bullish momentum breakout away from this parallel descending trend line. And right now it's just inches back up above the 50 level mark, hasn't reached the overbought region yet. So indicating that bullish momentum in the short term has started to resurface on the Aussie dollar ahead of RBA announcement later on. All right, so later I'll share with you what is the RBA announcement and what is market viewing on RBA price monetary price. We call it a consensus or decision. So no change for sure, given the fact that 64.80 is holding as my short-term pivotal support that we have yesterday, where we flipped to a bullish bias for a recovery after last week bearish bias to attempt for that pullback. So that corrective pullback has really hit our target. So no point keeping on that bearish bias, given that we now at the inflection point where a potential impulsive up move, at least in the shorter time frame, may unfold. So using 64.80 as my short-term pivotal support level, maintain our intraday bullish bias for the start of the next impulsive up move, given that right now is actually reintegrating back above the former 8-week range resistance after yesterday whipsaw around it. But positive price movement or positive observation on the hourly RSI that I explained earlier on. Two near-term resistance level to watch, which is at the lower level from yesterday. Firstly will be 64.40, yesterday's former minor swing low of 2nd of July and 3rd of July now turns into a pullback resistance, followed by yesterday's Asia session high, intraday high, which is 65.65. So I'm watching these two resistance level on the intermediate term basis. That means on the very near term basis. Above 65.65 will increase the odds of this impulsive up move sequence continuing towards the 66 figure level, okay, which is so the 11th November 2024 swing high. Only a bearish U-turn and bearish hourly close, a breakdown and hourly close below 64.80, which is also close below the 50-day moving average, that would invalidate today's bullish recovery scenario to kickstart another round of choppy corrective decline sequence back into that range again. Next support level to watch will be the 200-day moving average at 64.20. All right, so that's for the Aussie dollar, still maintaining our intraday bullish bias using the same pivotal support that we have for yesterday at 64.80, except that right now we have a lower level near-term resistance to watch in first step first, 64.40 followed by 65.65 over here. That's for the Aussie dollar. Next up will be the dollar yen. So dollar yen yesterday we were neutral. So let me share with you the daily chart of the dollar yen. So the dollar yen continues to be trapped in this very complex sideways range configuration over here. Right. So this complex sideways range configuration has been enforced since the 22nd of April low. And yesterday push out saw the daily RSI hitting its key parallel descending trend line resistance level. All right, over here. And also, if we do the Fibo retracement of this push up, okay, it almost hit the 76.4% Fibo retracement, right? And previously on the 23rd of June, before that sell off to the range support level, if you look at the Fibo retracement, okay, it also hit 76.4 Fibo retracement very closely, ignoring the weaker over here. So every time the price action hit the 76.4 retracement in the last part, in the last push up from 13th of June all the way up to 23rd of June, there is a multi-day corrective pullback back towards the bottom of the range before it rebound. And after this rebound that takes shape from 1st of July all the way yesterday, it also hit the 76.4% Fibo retracement, okay, very closely. Okay, so with that, that could be some sign that indicating that there could be another, we call it a pullback towards the range support back again on the dollar yen. So yesterday we were neutral, and the dollar yen exactly hit our resistance level after breaking above the upper neutrality limit at 145.20. It hit the resistance level, and given that it's at a 76.4% Fibo retracement, and what's interesting over here is that the hourly RSI has started to shape this bearish divergence. All right, over here. Okay, price action show higher high, but lower high on the dollar yen at right exactly at the overbought level, and it's now trying to just exit from the overbought level, indicating there is some more room to actually do that pullback over here. So with that, given that it's now at a pivotal inflection zone, I would say 146.25, 146.70. So that will be my short-term pivotal resistance level. We will flip to a bearish bias away from a neutrality stance yesterday, but not looking out for a change of the trend yet, but more of a corrective setback towards the range lower limit, all right, in first step. So because it's still being congested in the range since April, which I share with you on the daily time frame. So first support level to watch on the intraday basis will be a 145.10. A breakdown below 145.10 may see the minor swing low of last Friday at 144.15. However, if price action instead of coming down and it starts to pierce up above 146.70 with an hourly close above it, today's bearish bias within the range configuration will be invalidated for it to seek up higher to, in first step, retesting the 23rd of June minor swing high area at 148 figure level. So that's for the dollar yen, using 146.25, 146.70 as my short-term pivotal resistance, flip to a bearish bias within a medium-term range configuration. All right, so that sum up the intraday technical outlook on the four major US dollar pair. So let us now focus our attention to the major stock indices starting from Asia, which is the Hong Kong 33. So Hong Kong 33, since late last week, we have been a bullish bias. Why? Because we deem the corrective pullback from 25th of June all the way down to 3rd of June is almost coming to its end. And right now, price action has indeed turned positive as we start to see a bullish breakout of the first resistance level we highlighted last day at 23,880, 23,980. And we also see now finally positive movement on the hourly RSI. We see same low on the price movement yesterday during the start of the Asia session. And however, the RSI continues to slope upwards thereafter. And right now we see a bullish momentum breakout over here. All right. So with that, with the breakage of that 23,980 as we are speaking right now, we could tighten our short-term pivotal support level to 23,690 over here. So let me tighten it. Oops. 23,690 will be my adjusted pivotal support for today, given that this has already been taken out. Okay, this will be the first support level to watch. So this will be the next support level, no longer the pivotal support for today. Okay, so for the Hong Kong 33 representing the Hang Seng Index, we'll still maintain our intraday bullish bias to advocate this potential ongoing recovery, potentially indicating that the minor corrective pullback from 25th of June and as well 4th of July has potentially ended, and right now we are in the midst of undergoing a new impulsive bullish up move, potentially within its medium-term uptrend phase. So using a tightened short-term pivotal support for today, given the positive observation that we see on the hourly RSI, which I explained earlier, 23,690 adjusted short-term pivotal support level, maintain our intraday bullish bias. Next two resistance level to watch on the intraday basis for the Hong Kong 33, representing the Hang Seng Index, 24,270, followed by the 25th of June minus swing high at 24,490 in first step. All right, above it potentially sees the medium-term swing high of 19th of March and 18th of March at this year, this 18th of March and 19th of March at 24,850 next. However, if suddenly there's a bearish U-turn and a bearish breakdown with an hourly close below 23,690, today's intraday bullish bias will be invalidated to see a revisit at the 50-day moving average at 23,450. So this 23,450 is very important. If price action starts to form a bullish reversal candlestick pattern again, this allows us to actually flip back to a bullish bias, given that it's still holding above the 50-day moving average and also still at the minor ascending channel support from the low of 2nd of June. Only a bearish breakdown below 23,450 that would trigger a deeper minor corrective pullback scenario, exposing 23,060 in the first step. So that's for the Hong Kong 33. Very quickly, the Japan 225. So the Japan 225 managed to survive right exactly at our pivotal support level, which is at 39,390. All right, so still no change, still using 39,390 pivotal support, maintaining our bullish bias for this recovery to continue. First resistance to watch, also no change at 39,915. That was tested during the US session yesterday, and right now during the Asia session is attempt to retest above it. A breakout above 39,915 will give credence to more for our potential recovery scenario to seek out the next intermediate resistance in first step at 40,355, which is the minor congestion area of 30th of June and 1st of July, where price action rejected and traded down all the way down to test at 39,390. Only a bearish breakdown below 39,390 and hourly close below it that would negate today's bullish bias to see the extension of this minor corrective decline setback towards 39,145 / 38,850, which is confluence with the rising 20-day moving average, and the 38,850 is a very key pullback support level because it's the former ascending triangle range resistance that got taken out on the 25th of June. So the former ascending range resistance has been in place since 13th of May, and it broke out on 25th of June. So this is a very also key support area to watch, 39,145, 38,850. So only a reintegration back below 38,850, we will say that the recovery is a fake bullish breakout. So a breakdown below 38,850 will indicate another round of very choppy corrective decline sequence on the Japan 225 to potentially revisit the 20-day and the 50-day moving average intersection point. We also confluence with the next graphical near-term support area or support level at 38,155 next. All right, over here. All right, so that's for the Japan 225. Still watching very closely the key short-term pivotal support level, given the onslaught of that important tariff-related news flow. But the Japan 225 managed to survive at it. So still giving due respect to 39,390 pivotal support, maintaining our intraday bullish bias. Next up, Germany 30, which representing the German DAX. So German 30 and German DAX continues to inch higher, right above our pivotal support at 23,770 that we highlighted since last week, late last week, indicating there is potentially signs of a impulsive upmove sequence that has already been formed after the two retests on the 20th of June and the 23rd of June at the rising 50-day moving average. And in short term right now, taken from the minor swing low of 20th of June, is now been evolving in the minor ascending channel. Okay, it's looking to seek up to revisit the current all-time high at 24,495 that is printed on the 5th of June before that minor corrective takes shape. So given that it hasn't broken up above the 24,110 level, yesterday it hit during the 1 a.m. mark. So that's more or less the close of the European cash stock market, the Germany's cash stock market, before just trading in a very tight sideways range. So there could be maybe potential a bit of pullback coming into shape during the start of the European session at around 23,870, given that the hourly RSI has just exited from the overbought level, but no signs of a bearish divergence at all, as the RSI continues to shape a higher high over here. So I do not want to tighten my short-term pivotal support to be so tight at 23,870 unless we have an hourly close during the European session at 24,000 above 24,110, then I could tighten it to 23,870. So for now, still maintain our short-term pivotal support as if from yesterday at 23,770, above 24,110 exposes 24,260, and that could potentially seek out new fresh all-time high at 24,560/600, which coincide with the 1.382 Fibo extension and also the upper limit of this minor ascending channel taken from the low of 20th of June. Only a bearish breakdown and hourly close below 23,770 that would invalidate today's intraday bullish bias to kickstart a corrective decline sequence again, exposing 23,570, 23,440. That's for the Germany 30. Onward next will be the major US stock indices, starting with the US Wall Street 30. So the US Wall Street 30 did that pullback. So that pullback managed to store around the median line of this minor ascending channel that I drew from the low of 19th of June before shaping a bullish hammer candlestick. So a bit of excess below the 44,370 short-term pivotal support that we highlighted yesterday. So tolerate this access to 170. So still maintaining my bullish bias over here. Why? Because if you look at the hourly RSI, hourly RSI has started to shape a bullish divergence, all right, and exit from the oversold level where the price action has a lower low over here. Okay, right. So given this bullish divergence at the oversold level, we will tolerate the access to 170. So maintaining our bullish bias at 43,370/43,170, still maintain our intraday bullish bias on the US Wall Street 30 for a minor recovery in first step. But first resistance level to watch for today will be at 44,700, where this minor congestion turns into a minor pullback resistance that triggered that deep intraday sell off yesterday from Singapore time 10 p.m. all the way down to 2 a.m. So above 44,700, revisit the current all-time high at 45,100. Only a bearish breakdown below 43,170 will invalidate today's intraday bullish bias and the recovery scenario to kickstart the extension of another minor corrective decline back towards the lower limit of this minor ascending channel that I drew from the low of 20th of June, acting as the next near-term support level at 43,600. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 managed to form that bullish hammer right exactly at the pivotal support that we highlighted yesterday, 6,220. So given that this is indeed a pivotal support, given that there is a bullish change of sentiment at the 2 a.m. mark by the formation of the bullish hourly candle hammer candlestick. So no change, still maintaining our intraday bullish bias for a recovery for today. 6,220 for sure with the short-term pivotal support, and we have a higher a slower intermediate resistance to watch for today, which is as a upside trigger level, which is 6,250 level. So let me put it in 6,250. So above 6,250, revisit last Thursday non-farm payroll, exposed non-farm payroll high, which is 6,290. Above it, may see the next resistance coming in at 6,330/6,355, which is a Fibo extension cluster level. Only a breakdown below 6,220 may see the extension of this minor corrective decline extending downwards towards 6,180, which is this dotted gray line here, which is the pullback support of their former ascending wedge resistance. Break down below 6,180, then this deeper corrective pullback may extend towards 6,136/6,110, which confluence with the rising 20-day moving average. Lastly will be the Nasdaq 100. So Nasdaq 100 also bounced off exactly at our pivotal support that we highlighted yesterday, 22,600, and also bounced off right exactly at the minor ascending channel support that I drew from the low of 23rd of June. So for sure, no change. 22,600 will be that short-term pivotal support that we have for today for the Nasdaq 100 to maintain our intraday bullish bias. First resistance 22,920, only above 22,920 may seek a fresh all-time high at 23,190, which is a Fibo extension cluster level. However, a breakdown below 22,600 will invalidate today's recovery scenario to kickstart another round of minor corrective decline sequence extending further to the downside, potentially seeking out the next resistance support zone, seeking out the next near-term support zone at 22,360/22,235, which confluence with the rising 20-day moving average. All right, so that sum up all the major stock indices intraday technical view. So let us now proceed to the commodities asset classes, starting with Gold XAU/USD. So Gold XAU/USD, like I mentioned, with that bullish daily hammer that's being seen right at the retest challenge of the 50-day moving average. So we will be now flipping back to a bullish bias, and so given that bullish divergence that's being seen yesterday at the hourly RSI and this momentum bullish breakout on the hourly RSI above this parallel descending trend line, we will be flipping back to a bullish bias from yesterday neutrality stance using 32.93 as my short-term pivotal support level. First support level to watch will be at this 33.22, which is the 50-day moving average. First resistance it got to surpass will be 3,360, 33.60, which is the 20-day moving average, and the minor swing high of 3rd of June and 3rd of July, very closely. So only above 33.60, so there's the upside trigger level, will increase the odds of the start of another bullish impulsive up move sequence after yesterday's retest at the medium-term ascending trend line from 31st of December 2024 low, and as well as the pullback of this former minor descending channel resistance bullish breakout will increase the odds of the impulsive up move sequence to seek out the next intermediate resistance, that 3,400, which is 3,400 next in the first step. Only a bearish breakdown below 32.93 will invalidate today's intraday bullish bias recovery scenario to see another choppy corrective decline sequence extending further to the downside, revisiting the 27th of June minor swing low area at 32.50 next. So that's for the Gold XAU/USD. Lastly will be the West Texas crude oil. So the West Texas crude oil continues to unable to see a breakout above the 69.15, 70.60 short-term pivotal resistance zone we highlighted. So we will still maintain our intraday bearish bias, but it's more like a range scenario. So first support level to watch will be 66.10. Only a breakdown below 66.10 may expose the 50-day moving average at 64.05. All right, coming in at 64.05. However, if price action starts to do a bullish breakout above 70.60 short-term pivotal resistance, today's bearish bias will be invalidated to see a further squeeze up towards 73.60. And above it, potentially see a revisit of that medium-term swing high at 77.60. All right, so that's also sum up the intraday technical outlook on all the major cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for other than RBA today? So before the release of RBA data today, we have this business confidence from Australia as well, as compiled by NAB. So this Australia business confidence came in better than expected. Trading economics forecast to be -5. It came in at 5 for June and above 2 in the month of May. So RBA decision will be at 12:30 p.m. Singapore time. So that's close to about 40 minutes from now. Market is already expecting a 25 basis point cut. So that is a second consecutive cut from RBA. So to bring it down lower to 3.6%. So that is already been priced into the market. So market will now looking forward to the speech by RBA governor press conference 1 hour later at 1:30 p.m. So if he sounded much more cautious in enacting further interest rate cut to give a bit about wait and see approach, that could reinforce our intraday technical bullish buyer stance on the Aussie dollar at the 64, 60, 63.80 short-term pivotal support. All right, something to look out for during this time period from 12:30 p.m. to 1:30 p.m. Singapore time. Then thereafter at 2 p.m. we have Germany balance of trade data, which is pretty key given that Germany is the anchor, one of the anchor economy in Eurozone. So that could also influence the euro dollar, the euro crosses rate, and the Germany 30 CFD index movement. So that's 2 p.m. Singapore time. Then thereafter will be a rather quiet US session. Indeed. All right. So at 7 a.m. we have another RBA official speaking exposed RBA decision today will be RBA Hughes' speech at 7 a.m. Singapore time. So something to take note of that could influence the market, and data that potentially influence the China stock market, which i.e. the Hang Seng indices, will be at 9:30 a.m. Singapore time. That is China inflation rate and PPI data. Right, then followed by those who have interest in the Kiwi dollar and the Kiwi crosses. We have 10 a.m. RBNZ interest rate decision. That is the New Zealand's central bank interest rate decision, where market expected to be on hold after cutting rates for the past few sessions, right, to maintain at 3.25%. Okay, so that sum up today's daily dose of market insights. Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.